Good afternoon and welcome to another VSA Capital Technology and Transitional Energy podcast. And this is our first one of the new year. And today on the podcast is with myself, Bill Smith, analyst at VSA Capital. But I welcome David Scriven, who's our head of institutional sales. Andrew Monk, my usual partner in crime on the podcast, is away on business in the US. And so, David, welcome. And how are you?
I am very well, thanks, and I hope you are likewise. And just as a kind of a precaution, if you hear any howling in the background, it is the wind, because I'm about sort of 4 or 5 floors up here, and it is quite atrocious out there. But if you'll bear with me, I'll sort of share with you some thoughts about the market at the moment. So I'll head off with that. And I usually start by looking at technicals and the ETFs, but looking at those and starting off, the market is eyeing if the S&P 500 can break the downtrend of lower highs since January 22. And I think it's important because at 1:30 today, we get the US CPI year over year, CPI ex food and energy, which is expected to be 6.5 and 5.7 respectively. Now, I think that market sentiment points to a big move up if it's a lower figure, and likewise a big move down on a big move up on a lower figure and down on a higher figure. That being said, the timing of any Fed pivot is really uncertain, and I think that upcoming earnings pessimism, kicking off perhaps in February time, may not be fully matched by analysts' EPS forecasts. Now, looking at particular sectors and themes, and again, technicals in ETFs, the clean energy ETFs are very positive, with solar names driving performance. And I note from work with another company that they've highlighted that China is looking to install between 83 and 99 gigawatts per annum of solar capacity from 23 to 25. In that sector theme and technicals, it is less so in technology, where ETFs in general have really only started to pierce 50-day moving averages. Now, the market is focusing on growth and value themes. And I think in enterprise software, surely SaaS names offer really better value now. And any kind of software in a number of areas, but say in that automates and improves productivity, will be in demand in the current market macro environment. Now, another huge theme is AI, and Microsoft is looking to incorporate AI software into powering ChatGPT into Bing. And I know, Phil, you're going to touch on this a little bit later, but what I also wanted to highlight is one of our clients, Superseed. This AI is a top investment area for them in 2023. In other areas, I think generally semis are suffering from demand trends in wafer fab equipment, but surely if it's not this year, in the years ahead, innovation is going to have a stamp on demand in areas like gate-all-around transistors, and that will be a driving force in the long term. In e-commerce, a number of US brokers are pretty positive on Amazon, and they're flagging that retail comps are improving. There's improving stock and inventory management, and valuation is another factor behind their positive view of the company. And finally, I just wanted to mention Apple's initiatives to diversify from chip suppliers and use its own, e.g. replacing Wi-Fi and Bluetooth chips from Broadcom, replace cellular modem chips from Qualcomm, potentially by 2024, and using its own custom displays in mobile devices as early as 2024 to reduce reliance on Samsung and LG. And that plays into another theme, which is kind of the reshoring theme. So on that, Phil, could you kindly talk to us about some of the things that you've been seeing and your valuable insights of them?
Well, thank you, David, for that. That's a bit of an intro and an overview, and just to clarify for our investors who I'd like to wish all a very happy and prosperous new year to, is just on the CPI, David. That's the Consumer Price Index data, isn't it? Yeah. Okay, fantastic. Well, listen, continuing on from what you said, and specifically getting on to transitional energy, renewables. I don't know if you saw, but Q Cells, who are one of the biggest providers of solar, it's silicon ingots, wafers for the solar industry, solar panel industry. They've announced that they are going to expand into the US. This is a South Korean company, Q Cells. And they've said that they're going to invest $2.5 billion building a complete solar supply chain in the United States. So that's very important news. And they're saying that they're looking to manufacture eventually 3.3 gigawatts of solar ingots, wafers, cells, and of course completed solar modules. And that's in Georgia. So quite exciting news there, and showing, they see the real potential of markets for solar in the States. Getting a bit closer to home, and this is on battery storage. We talk about this subject an awful lot in our podcast because it's hugely important in the transitional energy transition, as batteries and the grid are being used to stabilize supply when the wind's not blowing, the sun isn't shining. And a company called XGen submitted plans for 500 megawatt 1 gigawatt hour battery storage project in the Midlands, in fact, in Leicestershire. That's a huge project, costing over £350 million. So quite big investment going in there. Continuing on a sort of theme of batteries, Tesla have also filed with the Texas Department of Licensing and Registration that they're going to spend $770 million in the construction of facilities in Texas, including battery cell testing and manufacturing. So that's a huge investment potentially going in there in Tesla. So things continue to be on the move. Now, on the subject of AI, David, this is Microsoft. Potentially going to invest $10 billion in OpenAI, that would value this company, OpenAI, at $29 billion. I say potentially, I think it is, but anyway, it may potentially, anyway, whatever. But also, from that deal, Microsoft will get a 75% share of OpenAI's profits. So you can see that's a heavy investment in AI. And there was news out, I think, and this is on the Microsoft, looking very close in connection with this at ChatGPT, which is receiving a huge amount of publicity as an AI application. I don't know if I can use ChatGPT to write my investment research, David. I doubt it, but nonetheless, it's a very, very exciting product.
Well, it's going to recommend doc changes, isn't it, as well as helping search efforts in Bing. So they're going to be sort of a market that's dominated by Google. So they're quite a ways behind, but this is a way of moving forward.
Yeah, it's a very, very exciting development. And there's a huge amount of money going into AI, and news this week that InstaDeep, which is a London-based AI company, is going to be acquired by BioNTech for £562 million. And InstaDeep was formed in 2015. It's already raised money for Series A, Series B funding. And we see investment in January, which Google was involved in. But BioNTech is a German biotech firm, and I think it's looking to use the AI tech for drug discovery and medical development. So quite significant investment going in there. And continuing this theme of investment is definitely ongoing, no matter what how soft the public markets are. There's certainly investment going in privately into tech. And Oxbotica secured $140 million of Series C investment, and this is a UK-based technology company that specialises in self-driving vehicle tech. So very exciting. Now, looking at tech investments and a sad story in the battery tech space, and hopefully one that will come good. And this is British Volt, which is, David, you'll know, has started off with tremendous promise, wanting to build a gigafactory up in the north of England to serve the EV markets, but received early stage investment, but not the customers haven't necessarily come through yet. It requires larger investment. And apparently it has announced this week that it's in discussions with a consortium of investors concerning the potential majority sale of the company. Well, we really, really do hope that comes good, because we do need a gigafactory in the UK, so we don't get behind on the battery tech.
Definitely.
Yeah. So that's on the that's just on the renewable side. Now, there's a lot of negative news about it at the moment on investment, and we're trying to kind of pick up on this and say, well, it's not all is what it seems. And there's some news out this week which really caught my eye, and this is on UK fintech investment, so into fintech developments into the UK, and apparently we are now. This is according to Innovate Finance, an annual report from them, is that Britain's retained its position as a leading nation for fintech in Europe and the second best globally, behind the US. And it was saying that the UK saw a dip in investment from 2021 heights, but nonetheless, and it was an 8% drop, I think, from record-breaking 2021. Nonetheless, UK fintech companies received £10.2 billion of investment. And that just goes to show, what a specialisation we have in this country. And there are a lot, and I know from our own research, there's a terrific amount of private fintech companies or some public. There's been a lot of investment going from VCs and from private equity, and I hope as we go over the next couple of years, we start to see some of these companies, as they grow, get onto the public markets. But it's a very, very exciting area for the UK, and something that we specialise in.
Yeah, because I mean, the banks at the moment, the established ones have really got legacy tech, so there's so much opportunity.
Yeah, it's a terrific area. And you mentioned Super Seed Capital earlier, which is a client of ours, but they specialise in seed investments, big seed investment fund, and I know that they've got an investment in a software company in the fintech area that's already being trialled with major banks. So there's a terrific amount going on in the fintech space, and it's well worth doing research into and looking more closely out for investment opportunities. Now, sticking with the IPO markets, there was apparently a meeting was held last month with our Prime Minister Rishi Sunak and the ARM CEO Rennie Haas. This is according to a Financial Times report, and again, it's trying to convince ARM to IPO in the UK. Well, fingers crossed that goes ahead, but we shall see. Yeah. We shall see. Quickly on staying with semiconductors, staying with IP, Nanoco. This is listed company, 127 million market cap. The ticker is NANO. And this is a report, and it's obviously an RNS from the company as well. The company's been in litigation with Samsung. Nanoco produces patent-protected cadmium-free quantum dot tech. And this technology is used in very high-definition TVs, QLED TVs. Now, and of course, Samsung is a big TV manufacturer, right? So, there was a report in Shares Magazine I just read saying that, and Nanoco have announced this, Nanoco has reached a settlement with Samsung in its long-running legal battle. And Shares Magazine quote analysts projecting that it could net the company up to $500 million in damages. Well, that's speculative, and we will see about that. But nonetheless, this has been a long-running battle for Nanoco. It has been settled, which surely has got to be good news, and the company can look forward to developing its business further ahead. Now, staying on the subject of Samsung, they have their results this week, and Samsung, who are one of the world's biggest chip makers, as well as making all those smartphones we know about and flat screen TVs, they're a big manufacturer of semiconductors. And Samsung reported that their operating profits fell 69% in the October to December quarter. And it's the worst drop, apparently, in profitability since the same quarter in 2008. Well, the first thing I would point out is that Samsung's been massively profitable and has certainly benefited from very strong memory chip pricing. And in fact, they said in a separate statement, Samsung attributed the poor result to a drop in demand for memory that was greater than expected. So this is memory chips. And it said that semiconductors account for 30% of Samsung's total revenue, but nonetheless, it's as I say, it makes big profits from them. So wholesale prices for DRAM chips, these are used in personal computers and servers, were down more than 40% in the year to December. And that was an 8 month, we've seen 8 months straight decline. Now, David, we talked about this in previous podcasts, is that spend, we're seeing spend coming off in the PC and the computer server markets. And these markets account for, I'm trying to wrap my brains here, but I'm sure more than a third of semiconductor sort of global sales. They're big end markets and important ones alongside smartphones. So what we're seeing here is slowing demand for computers and servers. PCs are bought by consumers as well as businesses, but servers specifically in data centers and has benefited from cloud spend. So that's all slowing down, and it's starting to affect the chip companies, and they're starting to reduce their capital expenditure. And what Samsung, I think, announced, it hasn't announced a cut in capex that I can see here, but certainly Micron, who are another chip maker, they have announced they're reducing their capital expenditure, as have TSMC, one of the biggest chip manufacturers in the world. They've just come out with their results. That a strong set of sales numbers for the prior quarter, but their outlook is a bit weaker, and they're going to reduce their capital expenditure from $36 billion to 32 to 36 billion. So they're lowering that. So a weakening, as you discussed earlier, a bit of a weakening outlook for the semiconductor sector.
Yeah, I also wonder, even within this, that it's quite tough comps, though, isn't it? Even though PC demand is down quite with big headline figures, because during COVID we were all buying PCs. That's tapered off. So the previous numbers were very, very high. So I think that might try to put a slightly more positive angle on this, that those comps will start to improve.
Yeah, I definitely think so. You are right. We've seen a very unusual cycle, strong cycle in consumer spend, but also, a structural growth in cloud services, which has driven spend on computer servers. And so, this is going to be interesting to watch, actually, because the market may overreact. If you look at the Philadelphia SOX, Philadelphia Stock Index, which tracks the leading semi companies, I think maybe that's down. That's down well over 20%, getting towards 30% this year. The market's being hit really badly. The chip markets and the Nasdaq, and so there may be an overreaction. So we'll definitely keep tracking the news here and what's happening in terms of capital expenditure and outlook. Yeah, absolutely.
Cool.
Now, quickly, just moving on the theme of games and computers. I hate to say it, we saw results from Logitech. And I've got Logitech kit at home, I've Logitech speakers, Logitech mouse, but they tickers LOGN, and they have cited they've cut their sales outlook, actually, difficult economic backdrop and supply chain uncertainties linked to China's COVID-19 outbreak. So they said that their third quarter GAAP operating income fell by 35% on year, 271 million to 176 million, with sales down 22%. But I've not looked closely enough. This is a report on Reuters, so you may be right, Dave. Maybe this one is against tough comps, but nonetheless, they're citing challenging macroeconomic conditions and a slowdown in sales to enterprise customers in the quarter. So we'll keep an eye on that. Now, sticking with computers, moving on to UK quoted companies. company I always known as Batman, but it's BATM Advanced Communications, 140 million market cap, ticker is BVC. This company's got two main operating divisions: telecommunications and medical. And the telecoms division is involved in, it has solutions for IP surveillance, but software services, but in particular cyber security. MedTech's involved in laboratory diagnostics, but they announced that they had won a quote substantial government cyber security order valued at $26 million to be delivered over a maximum of a 5-year period. And it said the orders from the group's long-standing government defence department customer. And that's for a high-speed network cyber platform. So that's some positive news there for BATM. Worth watching. Now, one that we have commented on previously is Gresham Technologies. The ticker is GHT. Market cap's 150 million. This company's been making very good progress over the last 12 months, and certainly as we've been commenting on it. They're a software and services business, and they provide software technology for data integrity and control, banking integration, payments, cash management systems. So this is all feeding into the banking industry. So it's tech that's related to that and to payments. But they've given a trading update. We've seen quite a few trading updates coming through now for the year ending December 2022. And they have said, quote, following a strong Q4 performance, they expect to see their revenues up 31% to 48.6 million. And revenues from their core product, this is Clarity, the software, up by 39% to 35.5 million. And their adjusted EBITDA up 43% to 10 million. Now, I think, from my perspective, the business has got cash and equivalents to saying there's £6 million and no debt. So that is certainly a good positive. And I think that they've seen their recurring revenue, which we always look for in software companies, up by 17% to 28 million. So that looks a very good set of numbers there from Gresham Technologies, and certainly continuing the momentum we've seen earlier in the year. Yeah. And I guess finally, a couple of final ones, David, from me is ZAR. That's XAAR, 158 million market cap. And this is digital, I think Cambridge based, and they make print heads for industrial printers. So digital print head technology. And this sort of tech is, it's complicated in that when you are printing onto things like packages on drugs production lines, or food packaging, everything's moving at very fast pace through the production, and the ink drops have to fall very accurately, and so there's high quality tech, and they're used primarily for printing onto medical equipment, but automotive parts and tools, clothing, appliances, sports equipment, so all sorts of end markets for this. And they had a trading update for the year ending December, but they said the revenue is expected to be approximately £74 million versus 59 million. And that's a combination of organic growth, 9%, and acquisitions up 24%. They're reorganizing their factories. They're obviously working on reducing their costs, and they're on reducing their power usage. They got net cash of 8.6 million, but they did cite challenging macro conditions expected to continue into 2023, and that sales volumes in the printer business affected by uncertainty in China. And so that has looks like that's impacted the share price today, David. I don't know if you saw that one.
Yeah, it was down a bit, quite a bit.
Yeah. Okay, now again, one that we have commented on very previously, and again has been making excellent progress, and this is IQGeo. That's spelled IQGEO. Ticker is IQG, 120 million market cap, and they had a trading update for their full year to December, and they are, quote, ahead of expectations. This is a really interesting company. They provide its geospatial software solutions into the telecoms and utility network operators. Now, these are folks that have lots of kit in the ground, located geographically all over the place. So huge assets spread all around that need to be accurately located, but also if you're putting in new networks, you need to know where you can actually install them and what's in place already. And their software takes data from a number of sources for geolocation, including global positioning systems, corporate external cloud-based sources for geospatial info, so you can get a full picture of what assets are around where. And their products include Network Manager for telecom, naturally, Network Manager for electric and for gas. And so you can see what it's all used for. But very interesting business. And they said the revenue for the year is expected to be not less than £26 million, up from 13.8 million in the prior year. So that's 88% growth, and it includes that's organic growth in their core business of around 65%. That's organic. And then we have some acquired business in there as well. So, excuse me, a very, very strong momentum. And the company's moving from a loss situation into a profit situation, which is always kind of exciting, because you don't know just how quickly that profit might grow. You know, you've not got a nice, long, steady track record of profit growth. It's moved from loss into profit, so there could be, could be upside there. So they're saying they're moving to profit, but they are investing at the same time in their headcount. Strong balance sheet of £8 million. So yeah, that looks very, very positive for IQ Geo. Very good set of numbers there. And that, David, to end our podcast, is a bit of good news. So hopefully our listeners have enjoyed that one. David, anything further you'd like to comment on?
I'd just like to say IQG, what a way to finish there. It's fascinating, and I haven't really looked at it before, so I really want to have a look at that. And as you say, it could be due for a re-rate. But no, nothing further to add apart from say that big number I'm looking for is out any second now on the CPI.
All right. Well, we'll leave you to get on with that, and then to talk to investors. As always, to our listeners, we always welcome your ideas, your inputs. Please feel free to get directly in touch with certainly Andrew or myself. I hope Andrew is back next week. But David, I'd like to thank you very much for joining our podcast, and I look forward to take a podcast again next week.
Many thanks.
Bye-bye.
Bye for now.